Everyone thinks FTX failed because of a bank run. That's only part of the story. The truth lies deeper, buried in a balance sheet. The FTX collapse of November 2022 sent shockwaves through the crypto world. But the real unraveling began much earlier, behind the scenes, within a firm called Alameda Research. This trading firm, also founded by Sam Bankman-Fried, held an enormous hidden influence over FTX's operations and, crucially, its funds. Their entangled finances would prove to be a catastrophic weakness. Alameda Research wasn't just a trading partner, it was FTX's largest customer, and it operated with privileges no other customer received. While FTX positioned itself as a secure, regulated exchange, Alameda was reportedly allowed to borrow billions of dollars from FTX customer funds, often without the typical collateral requirements or robust risk management protocols. The critical element in this financial web was Alameda's balance sheet. A leaked document, first reported by CoinDesk, revealed that a significant portion of Alameda's assets were not in independent, liquid holdings, but rather in FTT, the native token of the FTX exchange itself. This created a dangerous feedback loop, a house of cards built on its own foundation. As the crypto market experienced a downturn in 2022, the value of FTT tokens began to decline. Alameda's balance sheet, heavily reliant on FTT, started to shrink. To meet its obligations and cover trading losses, Alameda reportedly drew increasingly on the credit line extended by FTX, using customer deposits as its personal piggy bank. The problem escalated when Binance, a competing exchange, announced its intention to sell its FTT holdings. This public declaration triggered a sharp price drop in FTT. With its primary asset depreciating rapidly, Alameda's solvency became questionable, and the true extent of its reliance on FTX customer funds was exposed. Customers, sensing trouble, began to withdraw their funds from FTX. This sudden demand for withdrawals, coupled with Alameda's inability to repay the billions it owed, created an acute liquidity crisis. FTX simply didn't have the assets to meet its customer obligations, as much of it had already been loaned out to its sister company. On November 11, 2022, FTX filed for Chapter 11 bankruptcy. The intertwined fates of FTX and Alameda Research demonstrated how opaque financial relationships and a lack of proper segregation between customer funds and proprietary trading operations can lead to spectacular and devastating collapses. It was a stark lesson in financial contagion. This video is for educational and informational purposes only and is not financial advice. Always do your own research. Subscribe for more deep dives into the intricate mechanics and human stories behind financial markets and major collapses. This video is for educational and informational purposes only and is not financial advice. Always do your own research.